Hi, level up community. This is Chelsea, and today we're diving into something every business owner should understand: qualified business expenses. If your client has a business, knowing which expenses are deductible can help them lower their taxes and stay compliant. So let's break it down in a way that's clear and practical. Before we talk about deductions, here's the first filter. Is the client's activity a business or a hobby? The IRS looks for a profit motive. If the activity is just a hobby with occasional income, it is not considered a business and deductions are limited. But if the client is actively trying to make a profit, then legitimate business deductions apply. So yes, your client must be in business to deduct business expenses. Once we know it's a real business, the IRS uses two words to determine deductibility: ordinary and necessary. Let's define them. Ordinary expenses. These are common and accepted in the business line of industry. Example, a photographer buying lenses, editing software, and camera insurance, that's ordinary. But if they suddenly buy a grand piano for inspiration, that's not ordinary in the photography business. Necessary expenses. These are helpful and appropriate to run the business, even if it is not essential. Subscribing to Canva or QuickBooks may not be required, but if it helps streamline your business, it is necessary. But an important tip: expenses must also be reasonable, not excessive or lavish. For example, a $300 business class flight for a quick trip may be justifiable, but booking a $5,000 luxury cruise to meet a client on the second day, that likely won't pass as necessary or reasonable. Timing and usage. Qualified expenses must be paid or incurred in the current tax year and used for the business during that same year. For example, if a consultant buys a printer in December 2025 but doesn't use it until 2026, they may not be able to deduct it for 2025. Business versus personal expenses. Here's where many clients get tripped up: by mixing personal and business expenses. Examples of non-deductible items: grabbing lunch alone at your desk, Netflix or Spotify subscriptions, unless it's clearly used for business like a DJ or podcaster, buying a suit for client meetings. It is still considered personal wear. Instead, here are deductible scenarios: lunch with a business partner or client discussing projects, paying a virtual assistant or freelancer, gas stall fees for traveling to meet a client. Why separating business from personal matters? If your client runs an LLC and commingles funds, like using a business account for groceries, they risk piercing the corporate veil. That means they could lose liability protection and become personally responsible for business debts or lawsuits. Bottom line, what's for business stays in the business, what's personal stays personal. So, there you have it. Qualified business expenses are those that are ordinary and necessary. It should also be reasonable and clearly for business use. Understanding them can save your clients thousands and give them peace of mind come this tax season. Thanks for tuning in. And if this is helpful, feel free to like, share, and comment. See you next time.